It's me from a financial firm. The USD INR pair is trading at an all-time high today. It surpassed the previous all-time high of 81.92 hit in October last year and is now trading above the 82 level. What's driving the USD INR higher? Let's find out. The Reserve Bank of India publishes the Manufacturing and Services PMI data every month. PMI stands for Purchasing Managers Index. It's an indicator of economic health. A reading above 50 indicates expansion, while a reading below 50 suggests contraction. Today, the RBI published the PMI data for the month of December, and it was below 50, which means that the Indian economy is now contracting. To be specific, the manufacturing PMI came in at 49.6 and the services PMI was at 46.5. Both sectors are now in the negative territory and have shown contraction for the second consecutive month. Why is this bad news for the Indian Rupee? Let's understand. When the PMI data is soft, it indicates that the economy is not doing well. In this case, India's manufacturing and services sectors are contracting. As a result, foreign investors become less interested in the Indian economy, and they start pulling their money out of the country. Where do they put their money? They buy the US dollar. Why the US dollar? Because it's the safest haven during times of global uncertainty. So when more and more foreign investors buy the US dollar, its value increases. And that's exactly what we're seeing today. The USD INR pair is hitting a new high because the US dollar is gaining safe haven status. Another reason why the USD INR pair is rising is because of the difference in interest rates between the US and India. The US Federal Reserve has increased its policy rate by 4.5 in the last 9 months. At the same time, the RBI has only hiked its policy rate by 2.25%. So there's a gap of 2.25% between the two central banks. As a result, the USD INR pair is rising. Foreign investors are getting less return in India compared to the US, so they're selling their investments in India and buying the US dollar. What should the RBI do to stop the slide in the rupee? It can increase its policy rate further, but doing so will impact economic growth. India's GDP grew by 8.4% in the third quarter of the last financial year. Will the RBI risk slowing down the economy to save the rupee? Only time will tell. Now, do you think the RBI will intervene and stop the slide in the rupee, or will it let the currency find its level? Comment below. And if you want to learn more about global markets, we have some wonderfully designed online courses. The link for these courses is available below. Happy learning!